Hello everyone and welcome to Market Week in Review for the week ending September 23rd, 2022. My name is Bei-Chen Lin and I have the pleasure of being joined by our Chief Investment Strategist, Eric Ristabin. Eric, how are you doing today?
I'm doing well. How are you doing, Bei-Chen?
I'm doing great, Eric.
Good.
Thanks so much for coming in. So there are sort of three things that I wanted to get your perspective on. The first being the Federal Reserve, the second being what's going on in Europe, and then finally just looking at some of the economic data points as it relates to the housing market. So why don't we start with the Federal Reserve? It seems to be that 75 is everyone's favorite number these days.
Yeah. It's not the loneliest number in the world. It is a popular number, and actually it's kind of interesting if you like I was watching kind of the tape live on the announcement. And the initial reaction to the announcement was fascinating. Market actually went up. Market got exactly what we thought it was going to get, 75 basis points. And then kind of what I would think, the way I'd phrase it is, and then he kept talking. and one of the phrases that really caught my attention, I think points to the dynamic that I think that Jerome Powell is functioning on. I think he's very clearly fighting this inflation dragon is kind of a crucible where he can either be remembered as Arthur Burns, the Fed chairman of the early 70s, or Paul Volcker. Right, and it's pretty clear that he wants to be Paul Volcker, right? He wants to be the guy that kills the inflation dragon, and it was interesting because the phrase that he uses, "We will keep at it until we are confident that the job is done." Keeping at it is the title of Volcker's autobiography. So I don't think that was accidental wording, right? And what he's telling people, either he's telling it explicitly and I think implicitly and things like that he is more than willing, if it's necessary, to put the economy into a recession, to kill inflation, he's willing to do it. And he's looking at those jobs numbers, 315,000 jobs created last month in an economy that clearly is slowing. And he's looking at the wage pressure, the Atlanta wage tracker at kind of 7%, and saying, we got to keep going until we're seeing some relief in the job market and some cooling of the job market. And I think that really is what eventually spooks the market, right? Because that means if they keep doing that, they're going to keep slowing the economy, and maybe they go too far and create a recession.
And markets are now expecting that the Fed might have to take interest rates all the way up to 4.5% or 4.6%.
Yep. Well, and as you know, the dot points, right, that came out were at 4.4%, which is 4.25 to 4.5. And if we think about where we sit today at 3 to 3.25, that means another 125 basis points before the end of the year. And we think this this rate hike of 75 basis points clearly puts the Federal Reserve monetary policy into restrictive territory, solidly restrictive territory, which means we really think now monetary policy is fighting against the positive nature of the economy, and another 125 will mean it's fighting even more. And the challenge, as we all know, is it takes 15 to 18 months for all of this stuff to actually work its way through the real economy. So we're not going to know the answer for a while, and I think people need to be prepared for this tension between inflation and recession for a while longer.
Speaking of challenges, let's jump across the Atlantic Ocean to Europe, where they face a plethora of different challenges. What's the latest over there in Europe?
Well, Paul Eidelman, a few weeks back talked about kind of our expectations that the energy price shock, a lot of it due to the Russian-Ukraine situation, is probably going to be enough to force the European sector into recession. Clearly, data is slowing in Europe too. When you look at kind of where we were, 6 months ago and where we are today, it's slowing, and I think it's important. It's kind of the same song, second verse, right? Isabel Schnabel, an executive board member for the ECB, said yesterday that it's clear we got to keep raising rates in the face of even slowing economic data, right? It's very clear that the ECB, the Bank of England, the Bank of Canada, the Federal Reserve are all dedicated to the principle they have to kill inflation, even if it means a recession.
Definitely some challenges for them. And then finally, let's talk about economic data, and perhaps something that's top of mind for many people is the housing market. And obviously the housing market is something we've written about extensively here at Russell Investments. We had put out a note back in June.
You've written about it.
So what can you tell us about the latest trends that we're seeing in the housing market these days?
Well, housing market is interest rate sensitive, right? Mortgage rates have doubled. So mortgage applications are off 56%. Housing permits are actually falling. New permits are falling. Starts actually, and we saw all that the NAHB, the National Association of Home Builders, came out with their sentiment survey this month, the 9th straight month that sentiment has degraded. It's at 46, and 50 is kind of the line of demarcation between poor and good environment for housing. So they're kind of getting more solidly in the poor section. The only thing that was even remotely positive on housing was housing starts were up, but that's a lagging indicator, right? That means, that just permits that were approved a while back are now actually people are starting. So I think what you have to look at it and say, yeah, there's headwinds to housing, and housing is a hugely important economic activity for the U.S. and, well, basically every country, but the U.S. in particular. And so, that is something that we expect to continue. But I think people who are expecting a cataclysm of housing, it's hard to see that, right? We're not in the same situation where we were in the global financial crisis. Going into the global financial crisis, there were 2 million homes that were clearly built that nobody should buy, even if they were allowed to buy them by poor banking standards, right? We had an overhang of supply. If you know anybody in real estate, and for the last 10 years, basically, the real estate agents have been saying our big problem is a lack of supply. So we don't have a supply overhang, but yeah, I expect some softness in prices. And certainly, bidding wars are going to, either probably be a little bit thing of a past, but I don't see this kind of cataclysmic step function down in housing prices. And that kind of what you wrote about that. There are markets like Canada and Australia that, even though we've had our relative affordability go down in the last 9 months, Canada and Australia kind of chuckle and say, boy, your housing looks cheap relative to ours. So it doesn't mean it has to end anytime soon.
Certainly a lot to think about, Eric. Thank you so much for stopping by and sharing your perspective with us. And to our viewers, thank you so much for tuning in, and we'll see you next time.
Hi, I'm Eric Risteman, Chief Investment Strategist for Russell Investments. If you like what you saw in this video and want to see more like it, please subscribe to our YouTube channel.